Time now for the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Jessica Inskip, Director of Investor Research for Stockbrokers.com. It is good to be with both of you. All right, Jessica, we're kicking off a new month. I can't really call it new money on Wall Street. It looks like a conversion of the funds. I want to get your big picture take on expectations for this month.
Yeah, I really think we're pointing to the labor market. I see cracks within the consumer as we're really at the end of earnings season now. There's a couple of components that really stood out to me. First was some commentary from Klarna, where this buy now, pay later, initially there was mostly $1,000 was where the revenue was coming from, as in people financing $1,000 buy now, pay later. That's turned into $100. So that's a little bit concerned. Value chains with McDonald's, which we'll talk about in a few. So just a couple of comments that tell me that the consumer is very bifurcated and that growing disparity absolutely could be of concern, but we'll get some more clarity later this week as we have the employment report. And of course, that'll feed into what we do with interest rates, which I really think is the big narrative. But still, there's, like I've been saying for some time, there's a bit of disconnect from the economy and the S&P 500. And I still believe in that AI narrative, and it's driving forward. There's lots of free cash flow and healthy profit margins and balance sheets there, but that doesn't necessarily is determinant on this low income consumer cohort. So just something to be cognizant of, something that I'm watching. If that broadens out and there's bigger cracks showing, we can certainly have more issues.
No, that's a great point. I've been paying more attention to that because I think over the past 2 years, we thought it was going to be a bigger concern than it has so far materialized. So it will be interesting to see what trends happen with BNPL. And, again, we've got that Klarna IPO coming soon. All right, Jessica, talk to us about the first ticker on your list. You've got Take-Two on your list. It's been an outperformer year to date. I mean, we've been talking about Roblox, but this can't go under the radar as well. It's been year to date, it's performed well. On a year-over-year basis, it's performed well. What's your view on this now?
Yeah, absolutely. I was reminded of gaming when we were looking at NVIDIA's earnings, because if we were to pull their revenue, though, they missed due to China and data center. Where they really did well was within gaming. It was $4.3 billion on gaming revenue, which was 14% up quarter over quarter, 49% year over year. Now, NVIDIA is not directly have anything to do with TWO, but it did remind me of the gaming sector, to your point with Roblox. So that's where Take-Two really comes into play. They've got a strong content cycle with Borderlands 4 coming out. There is continued Grand Theft Auto momentum, which is driving bookings we saw within their earnings. And very importantly is this consumer insights. There is, again, that bifurcated consumer, but the execution that they had in NBA 2K shows sustainable growth potential because of the targeted content ad strategy. There's deeper consumer insights, which drove recurrent consumer spending. That grew for NBA 2K 48% year over year in growth, which translates to 17% year over year for the quarter. So that provides recurring high margin revenue beyond just a one-time game sale. That's where player engagement's there, and there's monetization because players are spending more inside the game, which is really creating this sticky franchise and more profitable. I know every time my son gets his allowance, he likes to spend it on fake currency for Fortnite, Roblox, or something like this. So I certainly see the trend, but we can't underpin Grand Theft Auto and how that's going to translate and even include AI. And it's going to be very, very big once we see another trailer. There's rumors on Reddit about that. That's going to have more momentum. So I really think that there's growth still on the horizon for Take-Two with this really strong content-led game-playing world.
Especially as you think about the landscape for coming GTA 6, which we know the timeline's been pushed out, but their user base clearly is waiting for that one. All right, Rick, what do you notice about this chart?
Yes, so this chart we can see we had a situation where we're breaking out to the upside now just recently. We had our high points here. 245 is where things topped out and where we hit a bit of resistance repeatedly. You could draw this blue trend line sloping down across those highs. Now we have our green candle that's forming. We have held on to support at the confluence of our two moving averages there, yellow 21-day and orange 63-day exponential moving averages. Those were right around 230, 231, that area. Now we're having this big green candle. We're near the highs of the day still. We're pushing above the past session's highs. We would want to break above, if you were bullish, that 240, 243 area now at this point to try and test some of those highs once again. We also are still within the area of our white trend line here, our longer term upward sloping trend line starting all the way back here with these lows connecting here as well. So we held on to that critical supportive area. Our green line here near 219 also stands out for another reason if you were to backtrack in terms of our closing prices here. It was a frequent area of first resistance and then support. So we held on to this area. We are pushing above a downward sloping trend line. RSI has pushed above the 50 midline once again, which suggests a bullish momentum here. So now if we were to consider our other studies, volume profile and standard deviation channels, there's three main volume nodes that are close to current price activity. The biggest and most important is here near 225, our point of control. Roughly, it also lines up with our long-term trend line here. So once we get below this area, the volume really starts to dry up until you get down here around 210. So a crucial area for the bulls to hold. Another node here near about 235, 233, 232, and then things drop off once again here once you start to get above 240.
Okay, Jessica, let's move on to your next trade. You've got Mickey D's on your list, McDonald's. That's been, probably I'd call it around the same performance as the S&P 500 this year. What's your view on this one?
So value laddering, McDonald's is definitely a financial leader in the global fast food service industry. They've got 130 billion system-wide sales, 46% operating margin, over 43,000 stores. But there was top-line pressure from weaker guest counts, which highlights, again, that consumer caution, but a bifurcated consumer caution. So the way McDonald's is really battling that is via value laddering, catering to that bifurcated consumer, where we need to get that lower income cohort in the stores, get that count up. And they're doing that via this upcoming value meal rollout. It's a key catalyst, and hopefully that will reaccelerate some traffic and defend that share, reinforcing their position. But I find it interesting with that CEO commentary of value laddering. And I think that's something we're seeing more across the really any type of industry. So paying attention to that consumer, I think this is a real testament to that, but how McDonald's is shifting focus. We saw shifting focus with Meta and the AI players, how if companies shift focus to the right things, it pays dividends. No pun intended there, I suppose. So I believe McDonald's is doing the same thing with value laddering and catering to that low income cohort by the new value meal rollout that's coming later on next week.
Yeah, I mean, honestly, they need to do that because nowadays, if you're buying a meal at McDonald's, it's about the same as, like, say, a Chipotle. So they have to figure out something, especially as you mentioned that bifurcated consumer, let alone a consumer who could, technically speaking, handle it. All right, Rick, what do you notice about this chart?
The value menu ain't what it used to be, I guess, here for some of these companies. You know what I mean? But when we look here, 318, we can go back our red line, an old high here. We did make a breakout above that point here, but the stock had quite a bit of trouble breaking above that area with any consistent staying power here. So even though we did test it several times, we had some closes above that point. For the most part, things fizzled at that area. You could draw the trend line here from the high, connecting most of these highs here. It's a little messy here, but then we once again encountered resistance around that area. We had our breakout from there as well. So you could keep this trend line and consider it to be possible support going forward here. Trend lines can come back into play even after they've been breached here. We're also pretty close to it still. It's fairly close to our yellow 21-day exponential moving average as well. So that could be a place where the bulls could find a foothold if we break through the 21 EMA. That one comes in just below 310 or so. Notice as well that we have a green line here, 305. Low point here, low point here. It was the high point after our gap down that we saw a couple times. Then, again, like our last area, things got a little bit messy here, but it lines up with our orange 63 EMA. So these two areas are another price level that really stands out to the downside in terms of the repeated stopping activity right around that same point here. But rising wedge type shape overall as we approach that resistance area. Rising wedge typically regarded as a bit more bearish here, but really can go either way. You're looking for a breakout beyond either of those boundaries. You could see some energy if we start to push above that long held resistance ceiling here. Now, if we were to consider some of our other studies here, the volume really thins out once we start to get above 315, 316. You can see that there's not too much trading activity in this area to speak of at all. We're quite close to our +1 standard deviation channel, though, a source of potential resistance just above 317. So lining up fairly closely with that longer term resistance area that we were just discussing here. And then once again, 305 to the downside really stands out.
Okay, all right, so those are a level that stands out. Jessica, let's talk about the final trade on your list. You got First Solar on your list. Solar hasn't been a loved space overall, especially when you think about it on a year-over-year basis. But where do you see this going? I mean, they are still positive year-to-date for First Solar. On a year-over-year basis, it's a different story.
Yeah, absolutely agree. We haven't seen some love from this very recently. And I saw a lot of charts over the weekend showing solar demand more globally and its performance, which piqued my interest and thus the digging from there. First Solar is the largest US solar producer. So they have a big domestic production footprint. That is very important. And they are a beneficiary if policy aligns. So there's that big if you will. Now, digging into their earnings, they had a sharp rebound in bookings, which showed demand was there. That happened when we got this clarity on the post BBB bill, if you will. So we got policy clarity, which showed me pent-up demand, which was very welcoming, but they still have a backlog that's at risk from tariffs, and that's a key overhang. So I think longer term, because of their domestic, the keyword there is domestic, they've got a large footprint in the US, and there is a push to that reshoring. So their domestic production footprint, scale, and policy alignment, it still makes First Solar a structural winner, but I think there's still near-term volatility, there's near-term headwinds, and that's likely due to tariffs. So once we have some tariff clarity, there's still some stipulations that happened post BBB bill that gave some clarity that absolutely helped them. We need more clarity, of course, but I do think it's a longer term because of their domestic footprint.
Okay, Rick, why don't we pull up this chart and tell us what you noticed about the patterns?
Yes, Jessica's absolutely right. The tariff clarity is such a huge factor across the board here. But this is a pretty interesting chart. And the reason why I say that is starting here, we kind of held on to those previous lows that we saw in early April. You could draw a trend line based on our closing prices that connects these levels here. We touched on this trend line today. We're hanging on so far. But look at this green line here, a high point several more times, and that's where we've held on so far, right around that level near 190. So the old resistance has become new support. We had this big spike up, though. We topped out at 220 or so. Backtrack here, you can see that was the high point. After we had our gap down, that was another subsequent high point. So if you were to kind of consider this whole picture, it seems kind of like a cup and handle type shape where we have this long, gradual bottoming out and then a long rally to the upside here that takes us to the prior resistance point. We see a rejection back to old support. And then the hope for the bullish crowd would be that we would then continue on in our trend, giving us this kind of coffee cup type shape here. That's the thinking behind this pattern here. Certainly not saying it's going to happen or anything, but that's the setup that people would often be looking for in that situation here. The 190 level, that same area we mentioned, that's where most of the volume is, close to current price activity. Things get much thinner once again if we were to go too far to the upside here. So 190 would be a key area for the bulls to hold in this case.
All right, 190, key area to hold. That is our Rick Ducat, lead market technician here on Schwab Network, and Jessica Inskip of stockbrokers.com. Thank you both, guys. Appreciate it.